Hello guys, glad to have you on board again today. I'm finally back from vacations in Canada. It was pretty damn great. I've been meeting some very nice persons out there, and it was hell of a pleasure to meet in persons. So as I said earlier, I'm basically going to do this in the future and probably all around the next few years to come, some kind of anytime I'll go somewhere and travel, I will give you guys the opportunity to meet in person. So instead of you coming to me, I'll be coming to you in person so we can meet. And that's more important. I mean, I'm talking to you each and every day, so you feel like you know me, but I don't know you. And this is the reason why I want to go out there and meet in person. So this is the best way I can give you advices, personalized advice, to help you getting better into trading, and this is somehow the next step into educational content I can give to you, is to give you what actually you need as a unique person. But to do that, I need to meet you in person, and instead of having you here in Toulouse, I rather like to put myself into a plane, visit the world, and get myself to you. So we'll see about that. I'll probably get into the United States again later in 2019. I might be expecting some travel to China again in 2019 as well. China is pretty damn huge in terms of surface, but we'll talk about that right in time. So now we're gonna get back to work. I think that you might be expecting my release today to talk about the cryptocurrency sector has been pretty damn moving in the latest couple of days. I couldn't cover this up right there, and more importantly, I was in the plane yesterday and taking some heavy jet lag at the current time. So I'm sorry for the delay. I know you were expecting my comments on this, and I know it's pretty damn late right now, so we are far from anything that can be tradable in here. So we're just going to review what's been playing, what the signals were, what might be the expectation to be forecasting, and we're going to introduce another thing right now, which is, and I've been calling this, it's kind of, I don't know if you guys in the US or anywhere you or where you are around the globe, but in France we do have a confidence index when we have a look at the weather forecast, which means it's going to give you the sensibility of confidence I do have in potential scenarios. So I'm going to use it as an index divided by 5, and it's going to be 1 to 5, 2 to 5, okay? So it's basically leverage is not possible below 4. It means leverage trading is 4 and full confidence is 5 to 5. Whenever you get 1 to 5 means insufficient to trade speculatively. 2 to 5 means speculative entries are possible but upon signal only, which means you have to wait for a signal in a defined price area. And 3 to 5 means the speculative entries are already probably made, and you have to potentially get into trading breakout entries, but still with speculative leverage, which means impossible to get into leverage trading when you are at 3. Okay, so it's going to give you some kind of of stages, a clear visible information about the stages I have into forecasting myself onto trades, which means generally we'll start with 1 to 5, simply saying I have a potential scenario that might be at play in the next following days. I'm just watching closely and waiting for the prices to reach out the potential, the expected tradable area. 2 to 5 will be just we got into that area, found out the early signals that some other traders are doing the same. 3 to 5 will mean the signals were there, the price reacted to those signals, and we're now building the range that will precede the potential trading signal, confirmed trading signal, in which we'll switch to 4 to 5. And when you get to 4 and 5, you're basically going to get into the first leveraged reinforcements, getting into making money out of the trades by confirming them. And 5 to 5 will be just going fully leveraged on to get into maximizing the gains. And of course then pulling things out, which means after being on 5 to 5, which is going to restore to normal, which will be a downgrading from 5 to 5 to 4 to 5, which means we're going to first taking profits, and then we're going to lower the levels one by one to get slightly out, bite by bite, until getting fully out and enjoying a very nice profit if things went well. So we're going to use that right now. I think it's much better, because I've been talking about that with some users out there, and they were pretty agreed that the fact is sometimes I can give you the impression that I'm fully confident into something just because I'm talking about it. Just for example, right now, the US indices, most of you guys have been thinking that I was fully confident in here that the market would obviously go down and things like that, which is obviously not the case. So we'll see about that, but I think that confidence index will be just the best to give you clear sight of what I think about a market. No matter how convincing my words might sound to you, the index just tells you how far I am into putting leverage into that market. Am I still speculating? Am I early stages of speculation? Am I late stages of speculation? Am I getting into first leverage reinforcements? Am I getting full on? Or am I putting myself back out of that market and taking profits? Okay, so we're going to do it on every scenarios I have trades on or expected to take trades on. So first of all, we're going to start with the Bitcoin, and we're going to review this. I've been given it a number of 3 on 5 with a blue color, which means I'm looking for buying entries. Right here, it might basically be even 2 to 5, because I'm basically waiting to have a signal. So we're going to do this once again. This is the numbers we'll have to get to the 2-hour chart time frame. The daily chart is just giving us the context. So right now, the context is not that good, which means we're double bearish in a daily chart time frame right now, as we had a red arrow in a very long but still bearish cycle, and we now have a bearish momentum confirming this with a price reaction. It's not the best case scenario, not to say it's the worst, because we're still having down to down, we've got lower highs. Yes, we stopped making lower lows, but still, if we had to break this one down, I think we're going to restore the crashing patterns, which means making lower lows. So the thing is that right now, Bitcoin is going to try do everything it can to hold that bottom, because if we were about to make a lower low, that would be not that great. Not necessarily the end of the world, and going lower wouldn't be a negative outcome. I want to buy Bitcoins. This is why that number is blue and not red. If I had to put a red signal out there, I would be much stronger than much stronger. We're going to do it, but once again, I'm not here to just feed you guys and tell you what to do if you want to buy or want to sell. I'm just going to tell you what I do, how I do it, with how much confidence and things like that. So I'm always picking a side. I've been picking the bullish side right now. I can be right, I can be wrong. Once again, this is just bullshitting if you are thinking that way. It's not about that. You don't give a shit about being right, being wrong. All you care about is trading when it's your turn and managing the risks. Whenever you're right, you're going to take much more money than when you're wrong. And those who just care about right, wrong, good, bad, whatever shit this is, they're not traders, they're just gamblers, and you don't give a shit about those. You don't want to be gambling, you just want to be trading. So, moving on from this, if, for example, I wanted to take the bearish side, I would have given right here potentially a 4 to 5. Because now we have a clear double bearish, means I have a lot better confidence into moving downside, to the downside in the next following days than I do have into buying. But in order to buy, you need to wait right now to have a signal, which means you go into 2-hour chart time frame and you wait for a signal, which means I'm going to just put that label out there, and this is what we have. So basically in a 2-hour chart time frame, all the signals are bearish, which means you have absolutely nothing to trade bullish. You've got a pretty damn nice double bearish in here, followed by a bearish breakout, which means you've got nothing to buy. You basically just let it fall and wait to have double bullish. I remind you that buying a taking profit signal is not necessarily great enough, which means if we just trigger a taking profit, which, and I stand on this, probably will be the case, means that the bears will just take partial profits, but that's it. The bulls shouldn't basically shouldn't just buy a taking profit, which means the movement we've been setting in motion in the previous days is probably about to release its expectations, for an additional 1 to 2 weeks. So I expect the cryptocurrency sector to just remain bearish for the next few days, at least I'd say 5 to 10 more daily candles to forecast to keep on going to the downside, unless for some reasons we were to find a catalyst. I'm saying this in a technical perspective, which means at any time the market can be impacted by unexpected market catalysts. I don't know about those, of course, otherwise I would be a billionaire. So these might be able to impact the market if such thing were about to come out. The thing is that you can never anticipate those, so you have to trade technical instead. So you do need to assess this. The market is under high pressure, high tension. We've got potential unexpected catalysts that could show up. I don't know, for example, the ETF things could just go back at play, or whatever other reasons could just push the market to buy aggressively. But until and unless you have this, you have to trade technicals, and technicals right now suggest the market will keep on pushing to the downside, finding some more interesting buying prices, which means we're probably going to go there, making a taking profit pattern, retrace a bit, but not breaking the resistance and making another bearish movement. So from what I can forecast, we're at that stage. We're going to make a taking profit pattern, we're going to retrace 2 waves, and we're probably going to have to make a breakdown. So as a bull, I'd rather like to wait for a clear and clean signal to get into rising that number, which means for now I remain out on Bitcoins. I do still have a tiny amount of Bitcoins, but really this is negligible, and in order to get into buying actually with more money, I need to have a lot more confidence than that. So that number 2 to 5 is really too low to get into making another buy and hold. So I remain out on Bitcoins, waiting to have better and further informations about what's about to come. That restored volatility is nothing close to being a good news. So option number 1 is that taking profit somehow manage the markets to hold that support, and in that reasons we're gonna, if that's the case, then we're probably gonna have the desert crossing phase following on, which means we're not gonna break that taking profit support, but we're never ever gonna break the resistance we found out there, and we're just gonna have a dying in between kind of momentum. That will be good. That will be a good sign. As I said, the desert crossing phase is one of the phases that suggests the crashing pattern terminates. And as I said, for now, we're still trying to figure out which one of the 2 options we're going to take. Option number 1, as I said, is volatility is still at play, and this clearly suggests that's the case. And in that perspective, we're probably going to have to break down to new lows. Option number 2 is just we die in between, and we just no longer make lower lows and lower highs. We're just going to die in here, and whenever we do this, this will be the sign of a market being into the desert crossing phase. But I want to see the volatility literally crushed down, which is not the case at the current time. We clearly have volatility, we clearly have tension, and this suggests to me better odds for us to go lower, but I can be proven wrong. I know that. This is why the confidence level remains bearish, very low for the bulls. This is not the time you want to buy the desert crossing phase, because we'll have very high probability to have too much volatility to be in that scenario. So, moving into other cryptocurrencies, those I have better confidence on. These ones are 3 to 5. We're having much better scenario in here for the reasons that we have a clear exit sign in here. So we've got first and early signals of bullish guys trading that market. Didn't prevent the market from making that very nasty bearish candle, but remember this one was quite of being expected to me. We're going to review this. I'm going to just move out to not the Ethereum index, but just the ETHUSD in the one I've been making the technical analysis on. So just to, god damn it. Oh, this was on Coinbase. This is not the one I want. want ETHUSD from Bitstamp, yes, because we've been making the technical analysis on this one, the volume analysis, and this is why you will see that basically what's just been at play the next following days is what I was expecting. And the fact is that we went down to that next support, which was 220. We have a breakout area below 200, and I think we have high probability to go there. I'm just going to forecast things and just give you and just tell you how I got to putting. So we're going to get back there, and you just got to remember the levels. It's 200 is the breakdown level, which means stop losses will be triggered down there. And as I said, whenever we make those down candles, those down moves, we go there to trigger stop losses, which suggests that even though the support is here, you might not want to buy right here. You might want to buy a little bit lower. You want to buy the stop losses of bulls who's been putting too much leverage or things like that. You just want to wreck them and take their money. So if you want to buy low, I think we're going to go lower than that. I would suggest waiting at least for the price to make to go lower than 200 and finding a bullish signal in the 2-hour chart time frame. So in a daily context, the context is heavily bullish. We're in exit right here, and we're probably going to build a divergent structure in here. Pretty damn fucking bearish momentum in here. We're going to make another one, making lower lows to a lower support area. Probably going to have to break that support, reintegrate, but whenever we'll do it, I think we'll have a pretty nasty divergence, which means divergent structure always follow the same path. We're breaking down to new lows. We're reaching out to the next support in which we've done. We treated that support in here, broke it down slightly, ranged for a couple weeks, now broke down again to the next support, which is right here. We're going to probably break this one down as well, this is why I expect the price to go lower, but then will be divergent, which means the momentum will have less strength that it had on the previous bearish impulse, which was very violent. So very violent. Second exhaustion move, which is flushing out the sellers. Sellers will be out, buyers will be in. We're probably going to restore prices to the in-between resistance, which is right here. And if we go there with a V-bottom structure, I remind you that this is what I've been forecasting. The price will probably just go desert crossing phase in here before going into restoring the bullish trend. So this is what I expect. This is why I'm putting 3 to 5, because we're having early signals of ending of that crashing market. But the problem is that in the 2-hour chart time frame, we're still pretty damn far from having clear signal. So in the daily chart, we've got 3 to 5, but we need to wait for signals out there. Okay? We've got the early signals that the daily chart time frame wants to reverse, but we need to wait for 2 hours confirmation. And just right in here, we've got a breakdown, not detected, but as you can see, the market just tried a weak bullish, broken down, target exhausted. So we are now bearish, and we're having the double bearish in there. So I expect the market to go lower, and probably just to break down the 200s. So I would say next step in that scenario is just to wait for an additional bearish signal in here that will downgrade that number to 2 to 5. Okay, just consider this. That will be our new color setting. Whenever I put a red line, means that if we cross that line, making candle closes, not just showing up lower shadows in here, I want to have candle closes. If we do have this, I will downgrade the number in here, okay? Red means downgrading the blue levels, and blue signals will mean upgrading the blue signals, the buying scenarios, okay? So we're in a buying scenario. I had to pick a side. I picked the side of buying. I could be right, wrong, don't give a shit about that. Just have to be right in timing. So if we go there, probably have to wait for a signal, which means downgrading. If for some reasons we were to break up the bearish signal, that will be a good sign, not necessarily rising the level to 4 to 5, but that will just basically be, so we're going to use that instead. Okay, whenever the gray line is, means we're using it as a validation. Okay, so we're going to use the previous things. That will be a good sign for the scenario to move forward. So it will be validation side. We'll remain at 3 to 5, but we'll just be more confident that the bulls are at play in here. Otherwise, if we just go down to 200, basically says that we're going to make lower lows, and we'll have to wait for further informations and probably the taking profit or the exit structure that might be at play at the lows afterwards. But just as I said, in the Bitcoins as well, we could have a 2 weeks bearish movement ongoing, which means if we just find a taking profit out there, you might want to buy this one because we're right into the expected area. But you don't want to put all your money out there because taking profit patterns are not enough. If you've got an exit instead, then you can forecast to put all the money you expected to put into Ethereums, and remind you that you shouldn't buy just one coin. You should spread it to at least 2 coins. I myself have been choosing to remain into Ripple, Bitcoins, and Ethereums. Ethereum is the one I have the most at the current time because it gives me the most reliable signals to trade, but for now it remains the most bearish one. So you must remain cautious. But as you can see, at least right now, into Bitstamp, we have crazy high volume. This is what I wanted. So we've got a falling apart market. We've got crazy amount of volume showing up out there. It's not crazy, but that's the volume I wanted. I was expecting back then. If you have a look at the daily chart, so you can see we have pretty decent volume, a pretty decent amount of volume showing up. And this is what I want to see. So I still think that we could have another down move, making even higher volume than that. And whenever we'll have that, I'll be pretty damn ready to buy. We had an isolated early signal in here, could be used. So it will give us a 167 approximately. So as I said, to me, I think going below 200 is probably not just going to break down to 190. More likely going below 180. And this is where I think you might want to buy your Ethereums if you haven't already. If you already bought buy and hold, then you should be great. Not great. You shouldn't be scared. The buy and hold scenario must not be done with leverage, which means you're in that game as long as the prices are not to zero, and you just shouldn't be worried. I mean, the signals are great into the daily chart time frame, but as we said back then, we've got the double exit. We've got the exit confirmed by the price, not confirmed by the momentum. So I said we'll still have room for an additional bearish move that will lead us to divergence. I said that back then, and now it's clearly what the market chose to do. So you wait and see. But right now, I think that exit pattern is going to be the last one that the market will, if it is bullish, restore the bullish trend afterwards. But we're in a daily chart time frame, which means it can take months, and it probably will. So it requires patience. Nothing else than a buy and hold can be done in here, and buy and hold has to be respected the way it was planned, which means lots of patience has to be done. You shouldn't be scared, and moreover, if you are thinking about releasing your coins when we're trading a support, you're just wrong. If you already bought, you just buy and fucking hold, and that's all you have to do. The price I've gone lower. That's it. You shouldn't be worried about. Guess what? You bought at $260. That's great enough. Even if we had to go to $150, you'll think, oh, damn it, I could have bought a lot more coins. But is this really what you fucking care about? What we care about in a buy and hold is not having the bottom and having as many coins as we can. It's just buying a decent fucking price and expecting to multiply that amount by 5 in the next following years. That's all we care about. And from what I can see right now, we're still on track for that potential scenario. Now, moving on to other asset classes, we're going to apply that same coding color rules and just reviewing all the other asset classes. So we're going to start with the NASDAQ, and today we just had the NFP. We were working around the support, and yesterday was a pretty down bearish close. So the market tried to close lower. We're going to have a look at the weekly chart time frame, and as you can see, we've been making a bearish engulfing pattern. The thing is that if we were to close there or even lower, that would be the worst case scenario for the NASDAQ actually. If we were to buy the dip today and make a bullish Friday, which seemed to be the case at the current time, if we were to close higher and closing into last week's sessions, were to be a problem, because we will have a lower shadow candle plus a failed bearish engulfing pattern, and whenever the market failed to make a bearish candle, generally means that the bulls will be at play right early next week. So you might not want to sell right now just because it's way too risky, and if for some reasons the bulls were to take over at the end of that week and handle the weekly close at higher pricings, we're just going to go way higher than what you think. Okay, so Nasdaq's bearish. Nasdaq's been giving some weaknesses signs on that week, but we need to confirm those signals with a candle close. This is really, really important. If you have a look at the SPX, same things goes there. We've been making a bearish engulfing, meaning we've been breaking down previous week's lows, but we need to handle the candle to close below the previous week's low, otherwise the pattern is not validated. Okay, same thing goes for the Dow. Oh, sorry, that thing doesn't work out with the Dow Jones. So we're working resistance area in the Dow Jones. We have pretty damn interesting prices to sell, but you need to do it cautiously. Wall Street obviously doesn't want things to go worse. They clearly stated that we want the market to go higher, we want the market to be stabilized, and we want things to do great. We want to restore trades with Canada, things like that. So they're doing anything they can to hold the prices to the bull side. So unless you've been proving clear bearish reversal, you don't want to be selling the current support you're trading. Buying them if you want. As I said, I have to pick a fucking side, which means I've been picking a side in the entire US equity market, which is, to me, bearish. I took that choice, which means you can take the opposite one. You can decide to buy. This is up to you, but this is where I think things might change a lot, because a lot of you guys, and especially those I've been meeting in Canada, were thinking that I had strong conviction into Wall Street, where I obviously don't. My level on Wall Street is just 2 to 5, which means very low confidence into making bearish entries, and whenever I do, this is highly speculative, and moreover, it is far from being leverage trading out there. Okay, we're going to review that. I'm moving into the daily chart time frame, finding our context. I'm still trading the same things. Do you see a double bearish signal in the air? No, you don't. So the thing is that if you think this is heavy bearish, then I will say, fuck off. Momentum isn't confirming this. We have a bullish momentum. Yes, we have a bearish sine wave, but the bears are trying to get there, but we're making higher highs anytime we do this, which means instead of sine waves, instead of cycle, the market is forecasting and projecting the bullish momentum onto prices, which means prices are going higher. Cycles suggest they should go bearish. We have a divergence between the two indicators, which means we're expected a range. This is nothing close to bullish. We're not making trendy bullish. We're making rangy bullish, but bullish though, which means being aggressively bearish right now is nothing close to possible. Yes, we have sine waves suggesting we should find bearish signals, so we do have conviction to the conviction level is set to 2 for that reason, and only for that reason, because I have sine wave bearish, but I won't go to 3 until I have a double bearish confirmed signal, which is not the case at the current time. Latest one we had was back there. We had another one in here. At that point, I was a lot more confident than I am right now. Right now, I've been confident back then as well. Remember that. Have a look at the previous videos. I was confident back then. But I was confident into specific price areas when we had the double signals. Right now, we don't, which means it's bulls versus bears. It's ranging, but it's ranging with higher prices, which means I still want to search for bearish entries, but I want to cautiously doing this. And unless I've been proven right by breaking down a support and making lower lows, which we still don't at the current time, even on the most bearish market, suggest the market isn't bearish, it's ranging bullish, and whenever the market is ranging bullish, you don't want to be too aggressively bearish, otherwise you're just going to take losses on losses on losses. All right? So, and I remember you that whenever I did trade the Nasdaq, was back there, I haven't took a loss. I basically exited at break even, which means I haven't given losses to Wall Street. The Golden Boys didn't take a cent out of me in there. No, I just had gains and surrendered those gains, which is a shame because I should have taken gains, and instead of that, I just got pushed out by Wall Street guys. But it's just how it is. I mean, that's a battle inside a big war. They might have won that battle, but they didn't took any blood from me. I'm still fully alive and patiently waiting for the next battle I want to play into. And right now, all I see is that there's nothing to play. There was a short entry out there on the NASDAQ. We'll see that in the 2-hour chart time frame. We clearly had some bearish signals, and interesting bearish signals. We'll see this. Just give it a second to plot. So as you can see, breaking down double bullish by a breakdown, but I missed that trade. I woke up and the market was already there, meaning close to the target. There was no chance, not a chance to me to just get into that trade as we were already trading the target. But for those who were there in front of the computer when we were breaking down that bullish signal, this was clearly a very nice signal to trade. We had no bullish trade line, which means we had all the necessary room to break down. It's just that you just couldn't do it right here. You had to do it in those areas. If you've done that, if you took that bearish trade, then you're great and you've got nothing to worry about. The breakdown went lower than the target, which means at that point your stop loss must be at break even and you're just patiently waiting to see how it goes. Either Wall Street is going to surrender the gains and close at the low, and we're going to have a pretty damn fucking bearish week next week. Otherwise, option number 2, Wall Street is recovering, getting back to that resistance, making the weekly close in there, and we're probably going to be stopped out next week if the market is bullish. But if the market is going there, okay, I think this is what Wall Street is going to try doing today, getting in there to close back into the previous week's range instead of closing below it. And if we do get to close here today, doesn't say the market is bullish. Remember, we've got a bearish breakdown, got confirmed by breaking below the target, which means we could just trigger double bearish in here and go lower. If that's what's about to come, then you might want to reinforce the position on the double bearish and rise the confidence level to 3. And only after this, getting into eventually rising again if we manage to break down that low. But if we trigger a double bearish in here, might be interesting. But option number 2 is that if we do this, we're going to make lower. Second option is that for some reasons we go there, terminate the week, and early next week, they make the fucking buy the dip. Okay, means that we keep on moving higher, we invalidate the breakout, and that will basically suggest what I think, that anytime we try to make bearish breakdowns, the market is buying them out. This is suggesting what we said into the context trading, we're ranging bullish, which means the bearish breakdowns are very rapidly invalidated and bought out, when the bullish breakdowns may fail multiple times, but at some point we manage to make one out. Okay, so whenever you see breakdowns, generally the bullish breakdowns will follow through, where the bearish breakdowns will rapidly invalidate and be bought out. So I think we'll have signals next week, and probably the market will buy the dip, but you don't necessarily want to buy unless you've been choosing the bull side. If you've been choosing the bull side, I think right in here is something you might want to buy. You need to wait for a momentum confirmation, which you don't have right now. So momentum hasn't figured anything out there. But all you can see is that the bearish trend line has been broken down. So if you want to buy an intraday basis, I think buying some pullbacks might be an opportunity. I think buying slightly lower might be something you want to do. So if for some reasons the market were just to surrender the early gains of the first part of that session, you might want to eventually just try buying $7,380 where we've got volume support. Just make a speculative entry out there for bulls. You obviously need to have a momentum confirmation out there, because in the 2-hour chart time frame you've got nothing to buy. Okay, in order to buy you need at least to have one indicator. Okay, so I've been giving the bullish side game out there, even though, and I stand on this, I have to pick a side, and I've been picking the bearish side only, which means the bullish signals is nothing I care about. I'll handle my risk and I manage my risk on the bullish signals, but I only care about finding the bearish ones. Okay, so bullish signals, when you're choosing a side, when you're picking the bearish side, for example, bullish signals is just risk management. So all you care about is the taking profit patterns, the exit patterns, and that's it. All other bullish signals is nothing you care about. And you're only looking for bearish, double bearish signals or invalidation of double bullish. Okay, means if you have double bullish like we had back then, breaking it down was a damn fucking bearish signal. This is why, as a bear, this is where you should have traded. Okay, this is all I say. You have to pick a damn side. If you're thinking that the indicators will tell you what to do, you're just wrong. Indicators in the strategy are step 3, which means if you're going straight forward to them by just putting the indicator on the chart and saying, what should I do? The indicator says I should buy or I should sell. You're just fucking wrong. You have to take care of context. This is what tells you what you should do. And whenever the context is cleared out, you need to wait for a price to come up. So you need to have a technical analysis performed. You cannot just trade signals like that. Otherwise, you're just stupid enough to think that trading can be that way. It's not going to be the case. Trading requires human revising. You need to work, okay? It's not just an indicator is going to tell you where to buy, where to sell, make the perfect trades. It's never going to work that way. If you've thought it that way, you're just obviously wrong. Okay, so you have to put some sweat out there. It's not that complicated. Really, it's damn fucking easy. But if you miss those 2 early stages of a trading entry, you're just damn fucking wrong. Anyway, moving on to other asset classes, but once again, in the entire equity market, it's just a matter of Wall Street, and despite the FTSE, in which I've been switching to 5 to 5, which means I'm fully leveraged into FTSE. We're in the breakdown areas, just as expected for weeks. We're making the bearish breakdowns. The market is just fucking falling apart, and we're going to go lower than that. I expect the market to make more bearishness in the following days, at least as long as I haven't been proven wrong. We're working early support area in the daily chart time frame, and we have a technical area right here, which means those who are trading bearish, we will eventually take partial profits and downgrade that level to 4 to 5, which means lowering the leverage. Okay, we're downsizing the positions. So we'll have to search for potential bullish signals in that area because we're still in a bullish cycle, okay? And the target of that cycle is right here, which means when we're approaching that price, you might want to consider making potential bullish entries. We're going to take this as the potential area to work out, okay? The previous volume level, the next one, and the breakout level, where we got lower volumes. Okay, we're going to take all those prices and say it can occur right in here. Okay, right to the next breakout, to the next breakdown. So all in that area right here is where we're going to make where we're going to take prices, where we're going to trigger the downgrading. Okay, so partial taking profits. So I've been fully leveraged, but we're already into targets. So if you were thinking, okay, Phil, it's 5 to 5, this is about time to just go fully leveraged and put the damn shorts out there, it's not how it goes. Remember that you need to trade tradable prices. Right here, you've got nothing to trade bearish. You just got prices to get to buy the sales you've been making, rebuy partially. Because as you can see, there's nothing close to an exit pattern or a taking profit pattern, whatever. It's just nothing. It's just pure bearish out there. We've got nothing in terms of momentum, nothing in terms of sine wave, which means you just let it go. You just let the price go lower and waiting to have better prices. So it's kind of a wait-and-see approach out there, but what the next step you might want to do is just downsizing the position and taking partial profits out there. So leverage profits, which means I'm going to take huge gains out there. It took me weeks, not to say months, to get that scenario to show up and put things into motions, but I'm finally taking the gains out there. Remember when we were up there, everyone was just saying, fuck up, Phil, stop selling indices, they're not going to fall, whatever shit this is. I've been keeping straight on. I've been keeping my scenario as long as I wasn't proven wrong. I haven't, and fucking hell, now I get the gains. So once again, those who want to play who's got the bigger dick out there in Twitter and all their social networks or whatever shit this is, just look at the damn fucking gains. I don't care being right, being wrong. All I care is that once I'm right, I'm taking huge gains, and I just do. So right now, stops are at break even, so there's no chances for me to make any losses, even though for some reasons the market were to invalidate for a reason I don't know. I don't see any reason for the market to reverse in here. All I see is reason for that market to just work out that area, let me take a profit, and eventually retrace afterwards. But right now, I'm just working that area, and if I don't have strong bullish signal, and if for some reasons the bears remains at control, we could just go even lower than that. So you don't want to trigger the profit taking right now, as nothing suggests that's about to come in the 2-hour chart time frame. So you just wait right now to have the next signal. And how do you do that? This is pure and simple. You just go there, okay? You're going to set an alert. So we're going to take the FTSE, but we're not going to take the price. We're going to take sine wave beta. We're just going to choose what we want. I'm going to choose a bullish confirmation, okay, which means anytime we're going to have a blue triangle, I want to be alerted, okay, so I want to have the bull confirmation, and we're going to use the greater down. So I know I've been putting a video out there showing you how to make the alerts, but apparently back then I was showing you the crossing up to trigger the signal. Apparently some users might have some problems. It's working just well for most users, but some others doesn't have it working. So facing that issue, I've been showing that so that using greater than instead is working just for everyone. So you might want to use this one instead. So use the greater than and as well set the value to 0.9. At least you take 1 and you put it below. So it has to be any number in between 1 and 0. So use 0.9, but you can use 0. God damn it. Okay, it's not letting me use decimals. So you just use greater than 0. I bet it should work. I don't really know about that. So use per bar close. You want the bar to close to make sure you have a valid signal, and you're just going to use what you want to do. And once you've done that, you just move the damn hell away from here. You just stop looking at the chart. You just wait for the alert to trigger. So we're just going to do this. Sorry. So we're just going to do this. The plan is here is to trigger taking profit. On FTSE. Okay? So this is how it is. If this is a taking profit pattern, I'm just going to take away 50% of the trade. If this is an exit pattern, I'm just going to take it all and wait to have further information to eventually get back into bearish trading or not. Okay, it's just risk management. Taking profit means partial taking profit, depending on your aggressivity, on how aggressive you are as a trader. You might want to adjust. If you're very aggressive, you're just going to take 25% off. If you're balanced, you're going to take 50% off. If you're a low risk trader, you might want to take 75% off the table or entirely the trade. But if you got exit, that means 100% out for everyone. If this is a double bullish signal, if the exit signal is validated by the momentum, you just want to get the damn hell out. And from what I can see right now, it's probably going to be an exit pattern that will be triggering, which means if it's confirmed by the momentum, I'll have to take entire profits on the FTSE to eventually get back into that trade later on. But in short-term signals, I'll have to assess that risk as as the highest level of risk, which means if this is an exit signal showing up here, I'll not get to 4 to 5. Okay, if this is just a taking profit, I'll get to 3 to 5. Okay, if this is an exit, I'll get to 2 to 5, meaning I'll need to have other bearish signals to just go there. Okay, but for now we're just waiting. At the current times, let's say we're 4 to 5. Okay, we're entering the area in which I think the bulls or bears should take their profit, which should slow down the slope and slow down the momentum. But I don't expect the market to V-bottom that area. More likely to just range it up, finding some bullish activities just by the bears getting out and just range that price area. And then we'll assess if risks start to go to even more bearishness or just retracing and finding a bottom and go to higher highs afterwards. Okay, these are the options. We can just go there, ranging the price structure and then restoring bullish, and in that case that would have been an ABC structure, meaning 2 bearish consolidation. When we'll get to more bullishness, this is one option. Option number 2 is that, and that's the one I think we might want to see, we're just ranging, going to more bearishness and extending the correction to lower lows. Okay, and that will be 1, 2, 3, 4 to make, and 5 to terminate the structure. Okay, so we'll see about that. That's a long-term trading, but for now all we care about is just taking the first gains out of that very nice scenario that has been giving some huge gains. So I've been patiently waiting out there, just as I'm patiently waiting for the US equities, and at some point I think that they will as well trigger the damn trends I'm waiting for month. I've been waiting for month, and I'll take the exact same huge gains. So as I said, I don't care being right, being wrong. All I know is that I can be wrong in timing, but anyway, I'll be right sometime. And whenever I'll be right, all I care about is taking huge gains that will cover up all the speculative losses at once. This is all I care about. This is why you might think I'm overconfident. It's nothing close to this. All I know is that I have a statistical advantage, that timing can be wrong, but no matter how, this is why you must remain speculative when you're just searching for the right timing. And whenever the timing is proven to be right, you just must go on and put leverage out there to fulfill the gains and release what you've been working for. You're working for making money. So whenever the trade is showing you that you were right, both in timing and in the scenario, just want to take as much as you can out of this. Okay, you might just, as I swing trade, I might just validate 10 scenarios in a year, which means if I don't make them fully rewarding, I'm not gonna make that much money, and this is all I care about. Okay, I can be proven wrong into speculative timings multiple times. All I care about is for the scenario to just play as expected in the end. And whenever I find the right timing, you can be damn sure I'm putting leverage out there. So anyway, we're going to move out to assessing and trading the forex market. Now we're going to take care of the bond market first. So bond market first is, we're going to take the US 10-year yield. So 10-year yield is rising as expected, suggesting that the market, the yields are rising, meaning the T-bonds are falling. And whenever the T-bonds are falling, meaning that the money isn't flowing into safer areas, which means the market wants to take risks. And whenever you see that the equity market is upon support area, the VIX is failing to install higher values, and the money isn't flowing into yieldings, which means into bond market, everything suggests Wall Street's going to buy the dip. Just to set things straight, I think Wall Street is going to buy that dip once again. We'll still have to see the candle closes upon that week. If for some reasons they are buying the dip and the dip is not bought and the buyers are not strong enough to buy that dip, means that we'll have lots of sellers, a lot more than expected, and in that case I'll be jumping in without problems. But right now we need to have the weekly bearish engulfing in the candle closes, which means no trade for me until we're early closing tonight. So for now, all we have right here in the 10-year yield is probably an ABC correction, A, B, C, D, E. So A, B, C, D, E to come in yieldings. But no matter how, no matter what, we're going to have higher yields in the end. So from what I can see, we now have clear sight of the consolidation structure, which is obviously about to be a triangle. Okay, so I think we terminated, so which means right now we have to get ready to some more bearishness into yieldings, which means we're working around a final wave to go there. Probably not just like that, probably just this. Okay, so this was the third wave terminating out there. We've terminated, damn it, we terminated wave 4. Shit. So let me just lock that. Okay, so we terminated wave 4 and ready to set a wave 5. Generally is going to be an extension of wave 1. So in terms of Fibonacci forecasting, on Elliott wave forecasting, this is the area in which we should be following the scenario. We've got a Fibonacci on higher time frame in here. Everything suggests the yield should be setting above 3.3%. in the next following days, weeks, and months, as this scenario should just be going to play in the next quarter. So leading us to December, I think we should be there in December. This will be absolutely normal. So that's the scenario I want to put in play. So I'm selling T-bonds again, just as I'm selling the bunds very aggressively. Bunds have been doing the same thing, and I think the bunds are oversold, which means we shouldn't be there for the 10-year yields on Germany economy. We should more likely be there, even not to say that the target for December is to me above. So we should have some pretty damn movement in the next following days regarding the yielding, the bond market in euro area. So expect something to go eventually wrong into the euro area in the next following month, because I expect the bunds to just go there, or at least just there in the next following for the next expiration. Okay, so I've been messed around with the September expiration that was just right here, and we got the rollover. So I'm just right here right now been buying the bonds, selling the bonds again for the next expiration that's going to lead us into December. And I think in December we'll be pricing way higher in terms of bonds, in terms of bond market. So the bond market is not going to be there. I think where the Wall Street is going to be taking 40 basis point, I think we're going to take approximately 120 in the euro area, which means we might have some credit risks showing again in the eurozone. So you might want to be cautious with the euro. And I think the euro is going to surge in the next following month for that reason. But for now, we need to wait. I think probably yields are going to rise. Euro is going to range versus dollar. But at some point, we're going to have a switch in which the euro is going to surge, break all the resistances at once. As I said, to me, euro dollar is bullish. I stand on this. To me, we've terminated an ABC correction. We've been messing around. We're already bullish, but we're just ranging and building strength for the next bullish move to come, which suggests that level of strength for 2 to 5. Which means I'm basically waiting. I have to put a number out there. So once again, just in here, I think we're 3 to 5. I'm just going to use the bullish side in here. Could be bearish. I don't give a shit once again. Okay, so it's 3 to 5 to the bullish side, which means we're the best possible number for speculative trading, but need to wait for further informations. Which means we didn't have a double bullish in here in the daily chart time frame. So it's all set into the 2-hour chart. And as you can see, 2-hour chart is showing some damn bullish signals. We've got bullish breakout, so everything that suggests the bulls are at play. So we've got strong confidence, but not enough to get into leverage trading. Okay, so leverage trading is going to be set with the next validation level, which would be breaking the latest resistance, which is the last time we've got double bearish, which was right here. So we need to break that up to get into validation and getting into putting the level and rising that level. So no leverage trading until we got to 3% yielding into the bond market. So it needs to be higher, okay? It needs to be candle closes. So candle closes above 3.01 into yieldings on 10 years into U.S. economy. Until then, remain speculative, but I've got strong speculative conviction. Okay, it's the best speculative conviction I could have, but way too early to get into leverage. All right, same thing goes for the 10-year yields in the euro area. And we're going to talk about the forex market. So euro dollar, as I said, to me 2.5 into the bullish side. Once again, no double bullish on the bottom, suggesting that the daily chart time frame may still be ranging out there. So you need to wait for that range to show up. But in a speculative perspective, you need to search for a technical framework. Okay. This is what I've been taking care of right here, which suggests we have a 5 bullish impulse in here. Clearly is a wave 1. We're consolidating, but I don't see 2 bearish impulses in here, suggesting it's just an A wave, making B to C wave should be what I forecast. So I'm waiting for that B to C wave to just terminate. So we're bearish impulsing in here as long as we remain below that level, but above this one, there's nothing you should care about. I want to buy lower prices, which means the euro remains bearish to me right now, slightly more bearish than the dollar, and leading into breaking down that support and finding lower support area to just buy that C point. Okay, GBP USD. So on the euro dollar, it's 2 to 5. Okay, we've been clear on this. We're waiting to have bullish signals. The daily chart time frame is great. We've got early signals of trend into the local time frame. But we need to terminate the in-between consolidation. Okay. All right, so GBP USD, this one's interesting, really interesting, but the level I'm going to put out there remains 2 to 5, simply because as well, right at these, just as the euro dollar, we have some clearly mixed signals out there. So try to break down, not working out, not having a bullish momentum, so you clearly don't have a consensus out there. I've been choosing to buy for many reasons, because I think this is a long-term buying entries we could make out there regarding GBP, but as so far we have nothing close to viable bullish entry signals. Means that we must remain heavily speculative. The thing is that in the 2-hour chart time frame, we had some signs of bullish trends. Bullish taking profits means that we had some trending out there, and that's a good sign. So I'd like to see some more bearishness, some more bullishness. We've been breaking a tiny double bearish in here, so we had divergence plus a triangle. We've been breaking that up. That's a good sign, but I want to see that pushing further away, further up. I want to break that resistance, because we have a double bearish in here, and I want to see this one broken up. If that's the case, I'm not going to rise the signals to 3 to 5. It's just that this breakout trade, I'm not going to take it, simply because it will be 1, 2, 3, 4, 5, which means that will be the latest bullish impulse to make into a 1, 2, 3, 4, 5 structure. And if that's the case, that will just say we've built it, we'll have built a wave 1 impulse, 1, 2, 3, 4, 5. So basically, in terms of Elliott structure, I remind you that I'm using Elliott wave forecast as my technical framework, but you can use anything you want. It's just one step of the strategy. The strategy is highly customizable, and I strongly suggest you do not just copy what I'm doing, just try to build your own, but use my strategy, my overall rules to get you into safe trading instead of just stupid gambling that most of you guys were doing back then when you were trading cryptocurrencies or any other asset classes. But basically, this is what I forecast to come later. So strong wave 1, wave 2, 1, 2, 3, 4, 5. So wave 5 getting into wave 1 territory, not getting below wave 2. As you can see, we've been going lower than wave 2, but not with candle closes, and that's really important, which means we've been triggering in here just because we had a volatile event ongoing, but the market bought it out right instantly. But I want to see the resistance in here broken up to make sure about this. So I'll remain 2 to 5, but then I'll switch to 3 whenever we'll go there, but doesn't mean I will buy at breakout. I will buy the pullback, because I think the wave 2 is going to retrace. We might not retrace that deep. Okay, it means that we could have, and I think that that's probably what we'll have. We'll have wave 1 and wave 2 basically ranging, but not retracing that much. But I'm basically waiting to have wave 1 terminating. Whenever we'll do, I'll wait for support breakdowns into wave 2, and I will buy the pullbacks. And this is where I'll get to 3 to 5 buying entries, and whenever we'll break up, this is where I get to 4 to 5 and 5 to 5 to make big, nice gains when the trend will eventually take place. Euro yen, sorry. I'm bearish on this one. No questions asked, no problem. Even if we're just trying to buy, we had a double bearish out there, pretty nice. It's double taking profit, so it's not that big of a deal. But it's signaling the end of that bullish impulse. Didn't manage to break to new highs, which means lower highs. We're going to make lower lows. It's just a matter of time. I'm waiting for the yen to trigger. Euro has some bearishness to come, but I'm bearish out there. I'm 4 to 5, which means in here leverage is now possible. It's still a little bit too early. I would say leverage is possible whenever we make candle closes below that level, which we fail right now, but I think it's about to come in the next following days. So I'm just going to restore the 3 to 5 for now. I've been slightly anticipating this, but in 2-hour chart time frame, I think we have all signals. We've got taking profit from the bullish side, failing to make higher highs. We've got we've got weak bullish cycle ongoing, so I pretty much expect the market to just range that price before making the breakdowns. And whenever we'll break down, I'll get to 4 to 5. So let's say right now I'm already leveraged, okay? But in terms of strategy respecting, we should be 3 to 5. I'm already leveraging there, which means I'm over risk taking, but that's a personal choice, okay? In terms of strategy respecting, we're 3 to 5. I'm leveraging here, which means I'm taking a heavier amount of risk, but I do take that risk because I have strong confidence in there for many reasons, this is a choice I make. If you simply want to follow the strategy, you shouldn't be leveraged right now and waiting for the market to make closes out there to just go fully leveraged out there. USD, GPY, same thing goes there. It's 3 to 5. The market is failing to break us once again, but we've got a double bearish with an exit, which means as long as we don't go there, there's no problems for the bears. It's a little bit too early to go leverage as well in here, so we'll still remain 3 to 5 at that stage. But we're highly good. We're the best case scenario for speculative trading, which means we've got clear signs of bearish activity out there. We just wait for the breakdown to occur. Just as we've done with EURJPY, we need to go there and break the double bearish previously. So we've got double bearish in here, which means triggering the trade into the daily chart time frame. I mean, validating the context must be at least, can be either building a double bearish signal that will confirm what the signals we're trying to trade. Option number 2, breaking down a double bullish. Okay, so as we fail to trigger a bearish entry out here, all we care about is breaking down the bullish signal, which is right here. So we need to make candle closes below that low. If we do this, this is where we switch to 4 to 5, which means leverage trading is okay, and we'll have to forecast new bearishness. So for now, patiently waiting on the USD dollar, on the dollar yen, basically waiting. But I'm trading that currency pair. I'm speculative right now, but I have strong confidence for the trend to pull out. It's just now a matter of time. Okay, I'm just waiting for the market to find the right timing to get down there. Whenever it will, I'll switch to leverage trading. NZD yen, I'm having some trades as well in there. I'm basically waiting for the market to oscillate in between. In here we had a double bearish, which means this is where I got the strongest conviction. I'll get to 5 on 5 whenever we'll break down, which means I'll be fully leveraged whenever the market will go there. For now, I'm just already leveraged, but not that big of a leverage because I'm basically already trading USD yen and Euro yen, and the thing I care about in here is most likely the yen, so I don't want to put all my money into yens. But on the yen currency pairs, the one I have the strongest confidence into is clearly ENG, the yen, but I'm not going to put that much leverage in here for now, okay? CUSD, CNH, trading this one as well as bearish, remains speculative, but I'm strongly speculating because we have a double bullish in here, still waiting for validations. We didn't have the bullish triangle, okay? But to be fully straight in here, it's been triggering the triangle in here, which means it was unable to do it there. So I still forecast this to be a double bullish, which means we have to go there to get into 4 on 5, which means to validate the trend into the daily chart time frame, but into how we clearly have some strength out there, as we have already installed double bearish. So we've got double bearish in here, a pretty nice double bearish actually. So we also had exit, but unconfirmed exit pattern, unconfirmed. This one is confirmed. So for now, the context in here is resistance. Okay. Sorry, so resistance, support, and the market is just dying in between, okay? So next movement you can make out there is waiting for you. This is where the level was previously, okay? So, damn it. Okay, so this is where I've been putting my signals previously. So the next possible action in there is to eventually make a selling entry whenever we make a candle close below the bullish signal. I'm just going to review this and say this once again just to set things straight. You need to pick a damn side. To me, side is bearish, which means the bullish signals are just risk managements, the bearish signals are good, and breaking bullish signals is as good as a bearish signal, which means we've got a bullish signal in here. If this one's broken down, that's good to me. That's a bearish signal. That means the bulls should take it over. They are not, which means I'm taking over, and that's all I care about. What my opponents are doing is none of my concern. All I want to be sure of is that I'm not the only one thinking bearish, and that we're all trading as right now. So we'll see about that. Dying in between suggests that either the bears might be in control or not. If we're going up there and breaking it up, I'll have to lower the leverage simply because bears have the control. They should break down bullish signals. Otherwise, it means I'm probably wrong in timing. But I'll just get out, patiently wait for further prices to try short again. And basically, I'm just going to downgrade the confidence I have. I'm going to be waiting to have better prices to restore eventually new bearish signals and getting into 3 to 5 again. And I cannot go 4 to 5 before we go there, or at least there, and we'll have to break down the daily signals to do that. For now, still speculative and waiting, which means if you're leveraged in there, you're just wrong, because I'm not. AUDNZD, this one is fucking 4 to 5. I'm going to tell you why. Simply because in a daily chart time frame, we're strongly bullish, and I think I finally found out the structure I was chasing, and I think the market is moving ABC, 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 which means we are building diagonal structure. That structure generally makes 3, 3, 3, 3, 5, okay, which means the wave that should come forward will be an extended wave and will be a fifth wave, and generally that wave is reaching out to 127 to 161% of the previous wave, which suggests we should heading up there, which is pretty great. We should as well break up the trend channel. So I expect that wave to be the bullish wave I was damn fucking expecting, the one that will finally break up that high. And as long as we don't get there, I won't be downgrading this. And as long as we remain higher than there, this is not the double bullish, so the clear, let's say invalidation is in here, which means I'll be downsizing to 3 to 5. But we could go there. Remind you that whenever we do this, the wave 4 generally enters into wave 1 territory. We've been doing this out there, but we could very well go there, which means we could have another bearish impulse going there. This is not going to be stopping that scenario. It's just I will consider downgrading and buying lower prices if for some reasons we were to break down. Right now, I still think the market is just fucking bullish, and this is where I'll be ready to buy. Okay, but this is where you put your stop loss at the current time. Okay, stop losses in USD, in AUD and UNZD must remain there in a daily chart perspective. Okay, we don't have double bearish. Momentum hasn't been confirming out there. All we have instead is a market that should go there and break that bearish signal. This is what I want to see. And breaking it up suggests the target will be right here. So just to set things right, this is the price I forecast us to go. Okay, because we will have the sine wave target up there. And that will be, to me, limit to just downgrade, meaning taking profits out there. I'm not going to reverse bearish, nothing close to this. It's just that up here, I'm just going to start taking partial profits. Taking money off the table and finally rewarding the patience, all the speculation, and the leverage trading I've been putting in motion on that asset. But I'm 4 to 5, which means I'll be 5 to 5 whenever we'll go there. This is where I'll get the maximum leverage to make the maximum amount of gains on that asset. USD MXN, I'm bearish on this one, but remaining 2 to 5 for a simple reason. The daily chart time frame still lacks of confidence. We haven't built a double bearish out there, and signals are pretty damn bullish at the current time. So just to be straightforward in here, we should even be 1 to 5, which means waiting to have signs of bearish activity out there to just get into putting more money at play, because either in daily and 2-hour chart time frame got nothing suggesting the bulls are playing. So I've got double bullish. So first signals to me to go 2 to 5 will be breaking down that damn bullish signal. Will be a good sign, because in here isn't a double bullish. Momentum wasn't confirming back then. So here is where we've got the double bullish. So either breaking it down will lead us to rise to 2 on 5. Otherwise, I'm just waiting for the price to move slightly higher or whatever. So the next level to trade is not an invalidation here. I'm sorry about that. but this is the next speculative area in which I'll be searching for signals near the 61% retracement. So approximately there is the area I want to see and seek for next bearish entries. So either we go there or we break down the bulls, suggesting we terminated that bullish impulse, and in that case we will have made an A, B, C correction, and that will be subwave 1, 2, and then 3. Okay, so basically waiting right now to just confirm that potential structure, which means I remain highly speculative at that stage, which means I'm bearish, but not that bearish. And that's basically all I do trade regarding the stocks, the stocks themselves. I still do trade bearish on Tesla, but I've been failing the reinforcement I wanted to make out there. I wanted to fill the gap and selling at $332. I haven't been met. So which means right here I'm still bearish. I have 50% on the table right here. I've just been taking 50% off the table out there. I'm now waiting either to have that thing collapsing for once and for all, or we're just going to range that price area. But anyway, I still want to remain bearish in there, so I still have 50% ongoing. Apple, I'm still remaining waiting to have bearish signals. This suggests we might be looking at a pullback, so wait for. So I expect the market to make additional bullish impulses right now. We've got nothing close to bearish signals. It's a 1 to 5 for the bears. We have the exit signal. We've got a double bearish out there, but the daily chart time frame is just strongly bullish, which suggests what we have right here is just patiently. Damn it! Okay, we're going to change things on Apple because we'll have bullish breakup, but we're right into the expected target. Okay, and when we're in 2 hour, we've got a double exit, which means right here bears are really in control. So if you want to go Apple, I think it's good to go. We're 2 on 5 in here, which means you can speculate. You can speculate, but you need to put a stop loss not that far away from here. I say a stop loss at $240 would be decent enough to trade this bearish. So speculative is okay right here. I think you can trade bearish on Apple. I am already, so I'm not going to put more money into the table out there. But just to be fully straightforward in here, I think we have something because we're right into the daily chart target for the breakup, which means if the trend is really bullish, we're going to keep on going higher. So you don't want to lose that much on that speculative trade. And if it goes higher, you just want to give away the stop losses and don't want to fight a bullish trend. But there is some chances the market isn't bullish, and if that's the case, that double exit might be suggesting that those who paid out there are just going to be wrong-footed. And if that's the case, I remind you that anytime we go there, things will just go worse, worse, worse. We've got tiny gap in here. If we get back to those gapping levels, mean that this is just a trappy trend and that we're going to extend and reverse. So really, this is bullish. Just to set things straight, it's dangerous. So you don't want to put leverage out there. And you really don't want to risk more than 2% out there. So put a stop loss out there, and the stop loss shouldn't cost you more than 2%. But I think it's okay to trade, as that double bearish clearly is an exit signal. That's the strongest signal you could use as a bear. So I would say 2 on 5 is really not that confident. In fully respecting the strategy, that double exit would even deserve a 3 on 5, but as I don't have that much of a conviction into Apple, I will remain 2 to 5 in here. But I say okay for bears. If you want to trade, that's okay. I'm still remaining bearish as well on Amazon. I still do have a little tiny bit of Amazon. This is all I have right now in portfolio. I still have Amazon, Apple, and Tesla, and I'm waiting to have confirmed bearish reversal on the equities, on equity indices, to just get back into Facebook, Nvidia, and things like that. As for now, I think this is not that best of a timing, and as you can see, Amazon is triggering a double bullish, so I should clearly exit Amazon trades, just not to get into we're double bearish versus double bullish. So this is great. As you can see, double bullish, double bearish, the market is going to fight, and this is not a taking profit pattern. This is a damn fucking bearish signal, which means you can trade bearish. So you can trade bearish, but the bulls are still fighting it. So it's ranging in between, so you clearly need to wait. So in here, I'll be setting a 2 on 5, for example, as well. for the bears, okay? For the bulls, there's nothing you should be worried about, but I think if you were trading this bullish, right in here you're 3 to 5, which means it's not possible for bulls to be leveraged, okay? If you were leverage trading out there, strong danger, because yes, you still have bullish signals, but you had a taking profit in here saying you should be out of leverage trading, and now you're switching to bear, which says if you're still leveraged, heavy amount of risk that you're taking, and you shouldn't take that much risk, okay? So it was just to set things straight. We clearly have terminated a potential wave 5 in here, which means this could be a market top structure. I need to have further confirmations, which means I want to see the market ranging in here and breaking down the double bullish. That would be the best case scenario, because that will switch things in my favor. We'll restore the 2 to 5 for the bulls, and we will switch 3 to 5 for the bears. That means the bears will slowly taking over before eventually pulling out a downtrend. Okay, so at that stage, speculative, still room for bulls, but you shouldn't be leveraged anymore. If you bought Amazon, it's the time to take money off the table. You can remain bullish. Doesn't say that you should put everything off the table, but you should consider that at that point you should have taken gains if you were buying that asset. All right, so that's it. We're going to switch to your questions, and we'll see this. Banks in OZ is just raised interest rates on housing loans. This is against a collapsing housing market that bloated with excess stock because of manic masses of apartment buildings being built. It has the sniff of real trouble. Yes, I do think the exact same. Before the official raise with record highs petroleum and electricities. Yes, but once again, this is what the economy suggests. The market can just be staying away from economic realities for quite an extended period of time. So this is what the market should do because of technicals, because of fundamentals, but this doesn't say the market will do it in terms of pricing. Just remind you that once again, and the market is Schrodinger's cat. You just put it in the box and it can do however it wants. Can either be dead or alive, you just don't know, and the market might be acting really differently, even though the economy suggests we should lower the pricings, even though the technicals suggest that as well, doesn't say the market will do it. And you don't want to lose your money on a guessing, okay? Just think big picture out there. What we're taking advantage of is a statistical advantage, but in order to be statistically viable, you need to trade big. You need to trade many times, which means if you put too much effort into a single trade, you're just wrong. You're out of statistics. If you want to put statistics, you just respect the strategy. You don't lose more than 2% out of a trade. Even if you have that strong of a conviction that economy and technical suggest downside, you don't want to risk it all on single trades. Otherwise, it's just damn fucking betting, and this is not what you should do. So, Phil, crypto assets are absolutely correlated. The outcomes are always more volatile on downside and upside versus BTC. You can think it however you want. I think that this is just bullshit. The market does whatever it wants. We're into long-term investment theoretical pricings, which means what happens in there can be heavily complex, can be manipulated, can be however you call it, but nothing close to clean, simple, or whatever this is. It's not going to be this. It's more likely going to be complicated, tricky, trappy, or whatever, but it's more likely those words that's going to be at play than simple, correlated, easy to read, or whatever this is. So don't think it that way. Now, because if you think all the assets are going down because crypto is going down, because Bitcoin is going down, I mean, and you could just be proven wrong, and you don't want to put too much effort. You can think it that way, but you can't just trade it that way. Okay, you need to have signals to suggest this, and that suggests to me more bearishness is to come on the Bitcoin, but not necessarily going to be replicated into Ethereums and things like that, as they've already put it down exit patterns out there, which suggests we're nearly reaching the ends out there, and the structures are very different. So really, if there is some more downside to come into Bitcoins, I don't see that we'll make that much of a downside into Ethereums and other altcoins. So you might and once again, this is wrong kind of approach in here, which I don't give a shit about. I trade what I see, what I think can be helpful, but I'm never trading just what I think. Okay. So regarding predictions involving time, oh shit, you shouldn't do that. But yes, sine wave is kind of taking care of time. I mean, timing is important for sine wave, but once again, sine wave is nothing I trade with. Sine wave is one of the two indicators I'm signaling with, which means I take care of step 1 and 2 first of all, and then I don't do trade just with timings predicted by sine wave. It requires a momentum confirmation, and that's what makes my strategy very strong in terms of risk management, because this is not just about timing, this is not just about momentum, this is not about just combining timing and momentum, this is about taking multiple time frames, this is about limiting the risks the most you can. If no, have you experimented with any indicators or method for including timing? So yes, to answer your question, sine wave's taking care of this. So enjoy your holiday time with your family. I've been enjoying holiday on my own, and that was damn great. And I'm pretty happy. I'll be pretty happy to repeat that. I'm going to Malta into late September, early October. So those who if some guys are living out there, I'll be ready and happy to meet, of course. So you can reach out to me using the email, so contact@proindicators.com, or you can message me into Discord or anytime you want. So if you live in Malta and want to meet, I'll be pretty damn happy to do it. Or if you even have friends who trades in Malta and doesn't know about me, I mean, you can try to connect us. That will be a pleasure. So, thank you for completely transparent on the AUDNZD trade. There are valuable lessons for us in that trade. Yes, there is for me as well. I've been strongly bullish. I had to lower my expectations sometimes just to buy at lower prices. That's all I cared about on AUDNZD, and I'm buying right now as we speak. I've been buying earlier today before making that video. When you say how low leverage, what do you mean exactly? Margin trading is some sort of position size formula. How do you calculate your leverage? Okay, so what I care about is not just about leverage. All I care is, just as Master of Beethoven has been telling you below, all I care about is both the costing of the loss. So how many portions of my capital is this going to cost me if the trade is going wrong and if the maximum stop loss is reached out to, and I generally set that level to 2 to 3%, which means I never lose more than 3% on a trade, no matter how much leverage. And then leverage is there to set the conviction regarding the volatility on the asset. Which means on a very volatile asset like the Bitcoins, I'm never going to use leverage. The leverage is going to be 0.1 to 0.3 simply because I want to divide the asset price movements against my equity. And on the opposite side, as for example, the forex market or the bond market is moving slowly and steady, on those markets I will put some leverage to multiply the asset movements on my equity pricings. If that's not clear enough, you can ask the question again, and I'll get into more details, because I've made that money management video for the French users, and I still haven't for the English ones, and you can be sure I'll do someday. And I'll catch up on you guys anytime I can. Just right now, I have lots of works to catch up on the work I haven't been able to do during the vacations, which means the next following weeks will be just there to catch up on the work I haven't done previous week. And then I'll get to Malta and I have to take care of this. At the end of that year, I'll have to take care of Pro time versions for the indicators, Ninja Traders versions as well, the MT45 and MT5 versions as well. So end of that year is going to be a crazy damn fucking mess to me. Heavy amount of work to take care of. So you can be sure that the educational content might not just be restored until 2019, but anytime I'll be able to, I'll catch up on things that you guys are late into, and that there's a couple topics, educational topics that I haven't cleared with you guys in English, and you can be sure I'll be doing them whenever I have time to do. So anyway, that being said, I'm going to stop here. Bye guys. See you later for those who live in Malta. And others. I'll get to you at some point. It's just a matter of time. I'll go worldwide, so no matter where you live, if you're ready to travel a bit, at some point I'll get nearby, and if you accept to come to me, I'll be pretty damn happy to meet with you in person. There's nothing in life I love more than just meeting local people, and I'll be sharing my knowledge straight to you for free, and you'll be sharing with me what you know about your country. It's just it's only positive sharing out there. No money involved. I'm not going to pay you. I'm not going to make you pay for personalized advice into trading. But all I ask for you in exchange is basically to show me what you live in, where you live. Just show me what you do, show me what your life looks like, and this is all I care about, and that's worth much more to me than any amount of money you can send to me. So, bye guys, and I hope to see you at some point later. I just done that for the Canadians, and your time will obviously come someday. Bye-bye.